Hey traders, happy Stratchication Saturday. Do me a fave, smash that like and subscribe button if you appreciate the content that I am putting out. Today we are going to be talking about gappers. If you have not yet watched my broadening formation and exhaustion risk video, you might want to go ahead and watch that first before you watch this gapper video, because a lot of those same concepts are going to come into play during the gapper video, so I don't want you to be lost. You can find that in Sara's trading playlist. So what is a gap? A gap is a big change from the closing price of one day to the opening price of the next day. They are usually caused by news events, earnings, Elon Musk tweeting on Twitter. There's usually a catalyst for the reason that it's gapping. I consider a gap to only be a gap when it can be seen on the daily chart. So I don't really consider hourly gaps a gap. It must open completely outside of the previous day's trading range, the entire day, so wick to wick. So for me to consider it a gap, I need to see a space of air on the daily chart. That's what I personally consider a gap. So when you wake up in the morning and you log onto your computer and see what's going on, what names gapped real big, the first thing you really want to do is get the bigger picture of the stock. I like to do that from the weekly time frame because we want to know, are we gapping into exhaustion risk? Have we recently stopped everyone out and now we can reverse? Are we gapping into all-time highs? Are we gapping into all-time lows? These things matter. So pretend you're in a stock and it gapped up huge the very next morning. What are you most likely to do? You're most likely to be excited about your profit and you're going to take it. So a good overall rule of thumb is gap ups are for selling and profit taking, and gap downs are for buying, so dip buyers. Just put yourself in the other person's shoes. How are they feeling on this gap up? What's going to happen? Because we're always playing against the other people. So we always want to be mindful of what they're thinking and how they're going to proceed with their trade. A stock to suddenly have good news will often come after the stock has hit new lows and taken everyone out. It's the perfect time to make people capitulate and then reverse the price. Remember, you are trading, you are playing against the smartest, best traders in the world. So you will often see this happen. In a bunch of the examples that we're going to go over, you're going to see the exhaustion risk. You're going to see, these names hit lower lows, and when people have finally, taken such a beating that they just can't take it anymore, and then they sell the bottom, and then it reverses. Alrighty. The first chart I want to talk about is Beyond. Price will oftentimes make new lows and just basically capitulate everyone before there is bullish news released. Remember, this is a game. The market is manipulated. These guys and gals know what they're doing. So it's our job to figure out what they're doing. As a reminder, if you have watched my previous videos, my orange lines are my previous week's high and low, and my pink lines are my previous month's high and low. Let's go to the daily. So this is a good example of exhaustion risk to the downside before bullish news came out, whatever it was. I don't even know what it was because, like I said, I don't care. But we had a technical setup here. So we were at the bottom of a broadening formation. Then we had an inside week, which we know as Stratters is a 2-1-2 reversal to the upside. So this was primed for a long. We took out all the stops. Okay. Back to the daily. So we had broadening formation exhaustion. We had a weekly trigger. Now, this day here, how do you know if we're gonna, there's two terms. It's gap and crap or gap and go. So how do we know? We don't know. We let price action tell us. Let's go back to 524 this day. On the 15-minute chart, we have a green 15-minute open. We have an inside candle. We have a 2 down. This was a short that you could have taken. So if you were short from here, you would have stopped out, hopefully at break even. Hopefully you weren't holding on to a loser. And then you would have flipped long on this candle because, like I said, the bears had their chance to take it down. They didn't do anything with it. So the bull said, here we come. We're going to go and buy. So you enter here. Original stop would be the low of this candle. And then once price moved up, you're just going to move your stop up. So your entry was at 115.45. As soon as I could, after the close of a 15-minute candle, I would move my stop to break even. My stop would now be 12 cents in profit from this entry here. So playing gappers is all about knowing the strat combo sheet. What is what? What is a reversal? How do we know? Let's look at it on the 30-minute time frame. Okay, so here you go. Here is the 30-minute time frame. Usually on gappers, I like to wait for a 30-minute setup to form because that really gives you a better idea of what's happening. So we opened, we went up, came back down a little bit, price opened up, we had an inside bar, and then right here, that's your reversal. That's how you know that they want to take price up and they don't want to come and fill this gap at this time. You also always want to know what your daily targets are or weekly targets. How do you know where the price is going to go if we continue upwards? So before you even play a gap, like I said, you want to know the bigger picture. You want to know what's going on. So your first target would be the high of this candle. And then the high of the next and the next. And you'll notice the pink lines was last month's high and low. So when we started coming back up and through the pink lines, it was a good chance we were going to get a monthly outside bar. So your minimum target would have been 140.70. Then you had this pivot. Oops. Then you had this pivot here and this pivot here. Couldn't quite take out this one. So I'm always saying draw on your charts. You want to know where your targets are, otherwise you're just kind of playing in the dark. If you're on the 30-minute time frame, you forget the bigger picture, what the targets are, what you're doing. So this is a really amazing setup because your entry was down here at 115.93 and it was basically, you know, a nice uptrend. And then, like I said, once we got in the middle of these two pink lines, last month's high and low, good chance we were going to become an outside month. And if you look at the monthly, see what happened? That was last month's high and low. So let's look at this on the daily time frame again, because we had a lot of gaps. I mean, this was the perfect bottom. So on this day, we opened here. So we had, when we opened, we had space from where this candle started to the top of this wick. There was space there. So price opened, went up, tried to take out this pivot and couldn't. So let's go down to the 15-minute time frame because we use multiple time frame analysis. So once we had this 212 and we knew that our target was 155, it was the next pivot on the daily. Once we tried to take it out and couldn't, you had a perfect short signal right here. This is a rev strat, and inside a 2 up, it failed to hit our target. So then when this candle opens, we short right here. So again, we don't know if it's going to gap and go or gap and crap. So you let price tell you. Now, yes, you would have taken this long at the high of this candle, 152, hoping to get to 155. You didn't. So you could have just been walking your stop up, or you could have left your stop at break even and gotten stopped out and then went short right here. Okay, so here we have BABA on the daily. BABA had earnings this day, so we opened here. I almost always have broadening formations drawn on my charts. So I happen to have this line here. Now, when we opened and we took out this low and we kept going, because it could have reversed right here. This could have been the last pivot to be taken out, and then we could have reversed and filled the gap. But we didn't, and how do we know that? Because we are looking at the smaller time frames. So this was a perfect target of this broadening formation exhaustion risk. So the target was like 206-ish. Okay, so here's the 30-minute chart on BABA. So we gapped down. The first 30 minutes, the bulls started to buy the dip, and we were green. So if this was going to go and fill the gap, we would have got a 2 down, 2 up reversal, but we didn't get it, did we? No. We let price action tell us. So then we had a flip. We had a 30-minute flip right here. So from the open of this candle, it was instant selling. Now, super aggressive traders could have got in as soon as this flip happened and went red, but we teach something different. So you would have shorted right here at 212.30 with this being your target. This was your broadening formation target from the daily. We hit it, that was the low. So again, we don't know what price is going to do. We let the price tell us. But we have our levels mapped out. We know where our possible targets are and what to expect when it gets there. We're going to go into the monthly time frame because this is where it all happened. This is where people who wanted to get back in this long got back in long in May, because we had 3 monthly inside bars. So we knew we weren't going to go up until we could break a previous month's high. So the trigger was 12.22. This was a target, this was a target, this was a target. Let's scroll back. This was a target, this was the all-time high at 27.67. Then what do we use when it keeps going? We use psychological levels. So I have the $30 marked as a target, and I have 35 marked as a target. Your next target obviously would have been 40. Okay, so let's go into the weekly time frame. Just because that's what we do, we use multiple time frame analysis. So we had a 2 up this week. The bears could have taken it down this past week, but they didn't because we didn't break the previous week's low. Instead, we went 2 up. We re-triggered the monthly. We hit all the targets on the monthly, and we hit our all-time high target, our 30 psychological target, and our 35 psychological target. Let's go to the daily. So knowing what we know about candles, we know we closed 527 at 26.52. Then we opened at 31.81. So this was a gap. So we closed here, we opened here, there was space between the open and the wick. So that's a gap. All right, let's go into the smaller time frames like we do. So how do we know if it's going to gap and crap or gap and go? Multiple time frame analysis. All right, so what did we have here? So on the first 15-minute candle of the day, we hit that 35 target. We hit that 35 psychological target. We pulled back pretty hard. Then we consolidated for a moment, inside bar. Then what did we get? We got an inside bar bull break. Couldn't take this out, so the price started falling back through. Odds were it was going to become an outside bar, so it did. So we short here. Short at 31.81. And then look, you got no higher high on the 15-minute time frame till here. So again, it's just knowing your levels on the daily, knowing your psychological levels, and following the strat setups, whether they're reversals or continuations. And then, like I said, remember that general rule of thumb, gap ups are for selling and profit taking. Okay, here's NVDA. Let's talk about this daily gap. So we closed here on this day, and then on this day we opened here. So we opened $18 lower than we closed. So this is a good example of when gap downs are for buying. SPY and Qs also did this that day, and Bitcoin tanked a lot this day. So we gap down. This was our only nearby pivot to take out, and it didn't do it. So from the open, basically, you can, I don't know if you can see, I'm going to zoom in on this candle. If you can see, there's hardly any wick on this candle. So basically from the jump, they bought the gap down. So that's why I was saying rule of thumb, gap downs are for buying. Okay, so here was the gap down open on that day, and this is the 30-minute chart. So we had a 2-1-2. So we dropped down, bulls bought the dip, consolidated. People weren't sure if we were going to roll over or not. We got a new candle open, and we continued up. So the entry would be here, 550.05, because we let price tell us what it wants to do. Don't just assume. Don't just pick a direction. Don't just think, oh, it gapped down, it's going to keep going down. That's not how this works. Dash. This is another example, you guys, of hitting new lows and making everybody capitulate. Oh, boy. Okay, so look at this. We made new lows. We got a reversal candle on the bottom. We got a green 2 down. Then the next day was a 2 up. So let's put our lines on this day so we can go look at the 30-minute chart, because that's what we do. We look to price to tell us what it's going to do. Is it going to gap and crap or gap and go? Gap and go. You didn't have a reversal till this candle here. So we had 2 up, 2 up, 2 up, inside, add, two up, two up, two up. Uh-oh, two up in red. Get out right here. What is that? 133 to 142. Oh, it's just a $10 move. See? Very easy. Let price tell you. Okay? Space. Same stuff, guys. Exhaustion risk to the downside. Look at this. I mean, as long as you understand that this happens, it's going to change everything. So these are pivot lows, and it took them out. Then we got a weekly flip. We got a 2 up. Just explaining the longer term outlook, because like I said, it's important when you're playing gaps. You need to understand what has been happening in the chart. Okay, so again, orange lines are last month's high and low. Monthly is last month's high and low in pink. Of course, you guys, you see this, we took out this, and then what did we do? We reversed. Like I said, the orange was the previous week's high. So, space did have bullish news. Obviously, that's why it gapped up. Because again, we don't know if we're going to gap and crap and fill this gap, or if we're going to gap and go. We are looking at the gap up day. Oh, we want the 30-minute time frame just because it's a little cleaner. So here it is right here. What do you see? Do you see a reversal? I do. You have an inside bar. Boom, go long. Target high of day. Then your other targets would come from the daily. Okay, so the takeaway from this video, play the price action, know your levels, know the bigger picture, don't predict what's going to happen, trade what is happening. Don't predict. Don't you guys wish you could go back in time and do things over? I do. Well, I'm going to go and edit this video because there's a lot of stuff in it that shouldn't be in it. Cheers to you, me and my kitty wine glass, because it's actually plastic. I have never in my life not broken a grown-up wine glass. I guess I'm not a real grown-up. Anyway, I will talk to you guys later. Have a safe and happy Memorial Day, and cheers.